Good evening, everyone. It's great to see so many faces and people from different universities. Those of you that don't know me, my name is Ryan Singh, and I help run the Helvetian Investment Club here at the University of St. Gallen. So today we're very fortunate to have Guy Spier as our special guest speaker. Guy Spier is the managing partner and founder of Aquamarine Capital in Zurich. He's also the author of The Education of a Value Investor, a book that's fantastic and also worth reading for anybody who's starting their careers in finance. Guy Spier also attended Harvard Business School, class of 1993, and also has a first-class degree from Oxford. I think Guy Spier made headlines in 2007 alongside his close friend Monish Pabrai for winning the auction to have lunch with Warren Buffett himself. And prior to giving his talk here, he's spoken at MIT, London Business School, and Google. So please join me in welcoming Guy Spier.
Good evening and welcome everyone, and thank you for having me. I want you to know that I have a massive amount of imposter syndrome for starters. And before I get into the talk, I'm going to do something that I've never done before, but I should have done every time, is acknowledge and thank some of the people in the room, including Ryan Singh, the president, Jonathan Broker, Leon Schutt, Ferdinand Meyer, Julius Lang, who are all board members. Having run clubs, I know that it can be an enormous amount of work, so we should thank them all for the work that they do in pulling together these speaker series, because often it's not very easy to get speakers, so thank you for doing that. I understand that we also have two professors in the room, Dr. Anastasia Karcheva and Dr. Robert Gutscher. Thank you for teaching us all. I'm sorry if I contradict anything that you teach in class. I hope I can be helpful. You never know. And then we have some guests here from Institut auf dem Rosenberg. We have Mr. Breet, Mr. Bernardo, and Mr. Bernardo. So thank you for coming. It's great to have some people from the schools in the area. And so then I get to click something. So I'm going to talk for about half an hour. And my wife over here, I should recognize my wife. All of you who, sorry, just for a second, who here is married? Nobody? So I'll give you one good. So if you're male and you're married to a Mexican lady and she's blushing a little bit, the more people in front of which you tell her that you love her, the better it is. So Laurie, I love you so much. You are all my reasons. Yeah, you can clap, that's all right. And Laurie should take a bow for putting up with me, really. It's a real nightmare for her. I can tell you, sometimes a nightmare for me. And then thanks to Chantal and David, who are my co-workers. We have a great time together at the office. So now I can launch into my talk. I'm going to talk for about half an hour. My wife is going to help me with that. She's going to sort of signal. She's good at that. And so I've given talks in St. Gallen before. I've attended here with somebody called Dr. Valen, who's a lawyer, and I've given talks on Facebook. And I want to tell you guys, if you're like the previous talks, you're going to have to be better at asking questions, because I'm scared stiff that when I finish my talk, there'll be no questions. So what is the talk about? It's just going to give you something to grasp a hold of, just some thoughts that are in my mind, ways in which I think. The best way, so here's how I distinguish myself from the lovely professor who smiled at me, so she's giving me support, is that I'm not here to tell you how the world is. The best way I think you can benefit from me in the picture, from hearing from me, is to say, oh, that's interesting to observe how this person thinks. And just very briefly, unlike your professors, I have not spent an enormous amount of time studying the world for the sake of studying it. I've been studying the world for the sake of trying to make money for our investors and for myself. And that's a very, very different perspective. And the thing that gives my perspective validity is if I share with you my experiences of what I'm doing. That's where the validity comes from, not because I'm going to try and sell you some theory of how to value companies or economic theory. And that's actually what my book's about. So I'll talk for about half an hour, and then hopefully there'll be other topics to talk about. And the first time I was here before I get going was in 1989 when my wife was 11 years old, which I'm 12 years older than her. And I was sent here by a company called Braxton Associates, which was subsequently bought by Deloitte. I was the sole German speaker at that firm, and we needed to recruit German speakers because we were doing work on the integration of the European markets. It was just before some big treaty, I don't remember which one. And so I don't know, I think we recruited here, and it was kind of fun to come here in any case, so I'm really glad to be back. So now I get to do my slides, and I would not have started with geopolitics in an investment talk, but I can tell you guys that I spend more than half my day just thinking about the Ukraine. I'm wearing this. I don't know what the world is going through, but it's something deeply unpleasant. We moved here as a family to Switzerland, to Zurich in 2009. And there was a certain part of us moving here which was because I felt insecure. And I felt insecure because of the financial markets, what they were doing. And I wanted to go to a place that was safe. And I do believe that Switzerland is safe. But it makes me deeply uncomfortable that what is going on in the Ukraine is going on in the Ukraine. And I spend all day wondering what I should do about it and feeling like I'm powerless to do something about it. And it's just shocking. And I don't feel like I can start a talk about anything else without paying tribute to the extraordinary bravery and desire for freedom that is only 1,000 kilometers from here. And I'm still kind of in shock that what is happening. And I'm ashamed that Europe, which has been peaceful for so long, is suddenly not peaceful. And what does that say about our world? But I don't have any answers there. But I can go from there into geopolitics and investing, and dive in perhaps to Warren Buffett, who's changed my life 25 years ago because I discovered that there was a way to be successful in the world of finance by being honest and being truthful and doing things the right way. And up to that point, I really did believe that in order to get ahead, you had to somehow kind of put one over the other guy. But it's interesting to me that the value investing philosophy that Warren Buffett has expounded and shown that is very successful has worked really well for a guy who's based in Omaha in the very, very middle of the United States. And I think that we potentially bring ourselves into great danger if we extrapolate the very unique conditions for investing in capitalism that exist in the United States to the rest of the world. It may well be extrapolable to Western Europe, but even there I have my doubts. And if we go to places like China or India or Africa, it may just not work. And I think that it's just really important. And many people of my tribe, and there's at least one guy here who's going to be at the Berkshire meeting, the Berkshire Hathaway meeting in Omaha coming up, who kind of think that we fall in love with this philosophy of value investing, and then we think that it's applicable everywhere. So especially events in Ukraine, but other things have made me far more wary of going outside of the place where it's really worked the best, which is the United States, and to some extent Western Europe, but not that many other places actually on the planet, which is kind of interesting to me. I wanted to spend, and again, I'm just going from geopolitics. I should go and see where the slides are. Do you note that I didn't put much up on the slide? That's so you don't get distracted by what's behind me. Let's see. Yeah, maybe I'll address that. Yes, I will address that now. So, so there's a book, I think it's called Prisoners of Geography. Wonderful book that kind of shows how so much of the world is driven by geography. And I just want to talk a little bit about the United States. I'm not going to tell you guys anything that you don't know, but maybe I'll share with you. That's very nice. Thank you. Is that a bell of approval or disapproval? Who knows? Thank you. I'm going to share with you some configurations, some facts that you know about the United States, which when I stop and think about it, make it just an extraordinarily astounding place. So east and west of the United States are two oceans with no enemies, nobody on their borders. North of the United States is the world's second largest landmass and democratic country that is more or less the United States, has exactly the same or almost the same political system. You know, we talk about that frontier being the longest unguarded frontier anywhere on the planet. And south of the United States, we have Mexico, not such a good history, but actually now completely pacified. There was disputes over territory, but there's no question of any kind of military engagement going to happen south of the United States. So you've got this whole continent. And then if we just go inside the continent for a second, the Mississippi River is not the longest river in the world, but it is, I think, I should have checked this before I came, the longest navigable river in the world. And there is a system of canals that connects up the Mississippi River system to the east coast of the United States, the Hudson River. And so you have in the Midwest the most extraordinary location from which manufacturing and other kinds of businesses can operate. At the same time, the United States has extraordinary mineral wealth. It has extraordinary agricultural wealth. There is no country like it on the planet. And then into that country, you give it the very, very best DNA for business. The American Constitution is a kind of a miracle that it's kind of held the country together. And you bring into the country some of the world's most industrious people. They all come from somewhere else. A huge number of Germans, a huge number of Scandinavians, people of sort of like Protestant ethic, hardworking. And then over and above that, when the country runs into massive difficulties like the American Civil War, this political system has the capacity to reboot itself in a way that I don't know many countries that have. In other countries, you get revolutions like you did in France or that you had in Russia. So what am I trying to say? I think that especially those of us who are familiar with the United States take for granted the insane, extraordinary advantages that that country has. And for that reason, and by the way, a lot of what I'm talking about right now is what I wrote to my investors, and they haven't seen it, so you're gaining an early look. Is for that reason that I feel extraordinarily comfortable that the vast majority of the investments of the fund that I manage are in that part of the world. So, and we could do some comparisons maybe if we come back to questions. With some other areas, there's no area that is as good. China is short of water, is short of arable land, for example. Brazil has a sucky coastline. The coastline is awful. There's very, very few natural ports in Brazil, for example. So I'll just share one other thing with you that is maybe more, so I have friends who are looking for investments in Turkey. And I've looked for investments in Brazil, in Oman. I've had an investment in Jordan. And here's what my conclusion is, and it's very, very sad. There's about 7 or 8 countries in the world. So if you're going to insist on not being in the United States, there's about 7 or 8 other countries in the world where you're probably going to do okay, and it's probably okay to make your life there. And by the way, half my family comes from Israel, and Israel's not one of them, because it's just a nasty neighborhood. My wife and I know some wonderfully successful Greek people in New York City. Somehow, Greek people in Greece don't do so well. Something very interesting about India is that Indians were doing well. This is kind of like anecdotal, you see. So I've just protected myself from your professor, because the professor would be like, where's your evidence? And it's okay, because we're doing something different here to what you do in class. But my experience of India is that Indians were successful, outside of India. Not so many successful Indians in India. That's changed in the last couple of decades. India has managed to change its DNA into something very, very different. Obviously, China has changed its DNA to something we don't know exactly what it is, but seems to be very, very successful. But I actually think that both for businesses to be headquartered and for individuals, you wake up in the morning, you ask yourself, am I in one of those 7 countries? And if you are, congratulations, you won the lottery. And if you're not in one of those 7 countries, just figure out a way to get to one of those countries and start your life there. And those countries are all the likely suspects: United States, Canada, Australia, New Zealand, Switzerland, Scandinavia, maybe other countries in Western Europe. I'm still not sure. Genuinely, that's the way I feel. And it's very, very sad. I mean, I think that when I see some of the instability that my wife's family has seen in Mexico, you can have everything ripped away from you anywhere you live, but it's just that much more likely if you live somewhere like the Ukraine, where people are going through enormous tragedy. So there's my little talk on geopolitics. I might have brought it out at the end, but I brought it out now. And yeah, sorry. I want to learn the Ukrainian national anthem and sing it. And go Zelensky. What can I tell you? I can't get away from that subject. It just weighs with me the whole time. So how are we doing on time? Oh my God, is it 25 past? Holy moly, I've got to hurry up. Oh my God. No, I'll just bore you guys for an hour and a half. So sustainability. So I think that I keep getting asked, well, no, I don't keep getting asked, but there's kind of like this drum roll of, are you sustainable? You should do sustainable investing. I've had some of our investors ask me, is your fund a sustainable fund? And then you have these firms that want to do sustainability ratings. They want to rate you. And, you know, I just want to, so we have ESG, environmental, social, and governance. You know, those 3 topic areas for what a business is up to are just so freaking broad that I find it, I kind of like, forgive me, I hope I'm not going to insult anybody, but I kind of want to throw up all over it. Because it's really, I would just tell you that I think that it is just a marketing strategy. It is a way to get funds under management. You call yourself Sustainable Asset Management. Forgive me, that's actually a firm. Whoever I've just insulted, I'm sorry, I didn't mean to. But, and you get assets under management, and you make people feel good because they're like, oh, I'm investing sustainably. I'm sorry, it's ridiculous. There, I said it. But here's what I think, quote, sustainable investing is really about. It's actually just simply about managing your risks when you try and make investments. And just to go back to my previous point, first of all, I'm a very fearful guy. If I go back 1 generation, my ancestors on my father's side were middle class and better owners of businesses in Germany who had to leave in the 1930s. And I and my father are acutely aware, as we see in Ukraine, that that could happen any time. And how do you protect yourself from that? So I really care about investing in a way that makes it very, very likely that the funds that I manage, which includes friends and family, will survive all sorts of calamities, unlike previous generations who did not survive those calamities. And I'm trying to have a rate of return that I can have as high as possible, consistent with not losing money. And that is my primary concern. In a certain way, I approached this kind of whole sustainability question. If somebody is smart enough to be able to do that, which was already for me hard enough and takes up every single one of my brain cells, and then they also on top of that want to layer on all these other goals, I don't know how to do that, and what I'd put to you is they don't either. They're just giving you a marketing strategy. What sustainability really is about is risk minimization. And I just want to give you a couple of thoughts about that. So having said that, so there's this guy, Milton Friedman. I was just reading an essay of his today called "The Purpose of Business is to Maximize Profits." And a lot of people have railed against that, including Klaus Schwab. And the argument is that a business has to do much more than maximize profits. It has to take care of all these other stakeholders. I think that where I come out to is that if you're not taking care of the other stakeholders, your risks go way, way up. So maybe it's a bullet that I dodged. I have, we checked the other day in the office, we have no clients in Russia and we have no investments in Russia. I have a dispute with an Indian friend of mine who's very, very interested in Turkey. And my answer to him is, I don't invest in countries where they imprison journalists, period, end of story. I just don't want to do that. And that would have kicked Russia out a long time ago as well. If you invest in unfree places, in places where, in a certain sense, any business that you invest in is a partner with the government that it's located in because it's paying taxes to that government, you're paying taxes. If I'm invested in a business in Turkey, my taxes are going to a government that is imprisoning journalists. If I have a business in Russia, or if I had a business in Russia, I would be paying taxes to a government that imprisons Alexei Navalny and does all sorts of other things. So every 10K in the United States, the public filings of companies that have publicly traded securities have a big, thick set of risk factors. And you guys might think that the job of a good analyst is to read those risk factors very carefully. And there are lots of them, and you guys can go and download the 10K for any company, and you'll see that. And what I've discovered is that, first of all, you'll either ignore them completely, or you will be scared the hell out of you by reading those risk factors. They're prepared by lawyers. But none of those risk factors, the things that come and hit any business, come from the side, from somewhere where you completely did not expect it. But a business that is investing in my way of looking at it sustainably or that is operating sustainably, is taking care of all of its stakeholders, long-term greedy. And as a result, those businesses tend to suffer less, if not at all, from the things that will hit them. And I guess I can just dive into some examples of companies that exemplify this and companies that don't. And it's in a certain way, it's not a predictive tool, but it's businesses that are operating sustainably, in my way of seeing it, are far more likely to survive. So the first time I came across this idea was Roberto Gozziueta. And how are we doing? Yeah, we're good. Oh my God, time flies. I only got through my second point. That's terrible. So Roberto Gozziueta gives a talk, or it's Muhtar Kent maybe, of Coca-Cola. And he says he wants Coca-Cola to be a brand, or to be a company that benefits everybody, every single person who interacts with it. So we start with the government, where the bottler is doing business, which receives taxes. But if you think of the brand that is franchised out to bottlers, bottlers might not be owned by the Coca-Cola company. That bottler could use some no-name brand, and they might get a certain level of sales. Or they could use the Coca-Cola brand and get a far higher degree of sales and all of the marketing support and branding that they get from the Coca-Cola company on all the products, and they're going to be able to drive more volume through the plant. So the plant, the bottler benefits. If you look at the corner store in some of these developing markets, the owner of the corner store has limited shelf space, and he can either put something there that doesn't sell very well, and he will make a certain amount of money, or if he can put a product that sells extraordinarily well, like some of the Coca-Cola products, and he will make more money. So you have a product that is kind of taking care of many different stakeholder groups, except, for example, now we have this question about sugar, which is, I don't know where it will go, but that would be a matter for concern. You don't want to sell products that are bad for people. So I'll just jump to another business that a very good friend of mine, based in the United States, is based here in Europe, has written about in his annual letter. the friend's Brian Lawrence. He just gave a talk at Grant's conference, and one of the companies he presented is Basic Fit. Did you know that in the Netherlands, which is where Chantal's from, she just walked out of the room. Oh, I see. Is that right? Do you know Basic Fit? Yeah. So $20 a month, and you can get, you can be a member of a gym, and there are all sorts of economies of scale there, and it's a growing brand, and everybody wants to go to a gym, and you get economies of buying the gym equipment. So I brought this up to Monish, and he's like, yeah, forget it. So Monish is my Indian friend, in case you didn't know. It's like only half my book writes about Monish. But, he described it as a win-lose. It's a win-lose because it's a well-understood phenomenon that in every gym you get 2,000 members, of which about 20 people attend. And at the beginning of the year, everybody signs up because they've just eaten a lot over Christmas and they really want to get fit. And by March, and if everybody used the gym, there wouldn't be enough space in the gym. So you're kind of like playing a game with your clients that you really don't want to do. And we can go into other examples. The tobacco company is very obvious. They're playing a terrible game. They're deceiving their clients into thinking that they're doing something that's fun when it's actually killing them. And in that tobacco example, the way I could look at it is to say there's a contingent liability on the balance sheet that has not fallen in with the accounting. The accounting doesn't show it. Because sooner or later, if it's legal or not, a government might come and just say, you assholes, you're killing our population, and we have to pay the healthcare costs, and we don't like that, and we're going to put all these costs on you. And when that happens, the shareholder will suffer. And just because I got to leave some time for questions, just one last example. There are many here. So what's my point to you? That's the kind of analysis that I try to do. I'm trying to identify businesses. Actually, interestingly enough, I have evolved in my thinking. I used to think about wanting to invest in high return businesses. I'm actually more curious now when the returns are not that high, if I can see that the company is spending money to take care of stakeholder groups in an intelligent way. And that, in a certain sense, for these businesses is long-term greedy. They're investing in their ecosystem, and they're making their ecosystem better. I glanced down here. One of my investments that I just visited in India is a company called India Energy Exchange, and it's a highly profitable exchange for electricity, a bit like a stock exchange. And what really bothers me is that their profits, they got 70% profit margin. It's just like ridiculously profitable, and it just really bothers me, first of all, because it's a target. But I sat with the CEO and I just said, can't you invest somewhere, somehow, in something? First of all, the profitability is embarrassing, but also, maybe you can build up your moat, maybe something, who knows? So I'm more excited. I'm very excited about India Energy Exchange. It's a phenomenal business. But it's really interesting that many of the investments of people that I admire, so if I look at Charlie Munger, one of his holdings for the longest time has been this company, Costco, which is consistently highly profitable, but is constantly reinvesting in their client base by giving them great products at incredible prices that everybody talks about in the United States. So that's sustainable investing for me. And I actually think we got a big problem with the sustainability stuff because it's really woolly thinking. And what's really hard is that it's not popular to say that. So I can say that because I don't care about the sustainability crowd, but all of you guys may not be able to say it because you're in a politically correct world, and the minute you say it, you're going to be labeled some kind of bad person. And it's not good. It's really not good. We do want to take care of the environment. We do want to have companies that are sustainable, but we don't want to have that masked by the kind of woolly thinking that I think exists there, and I guess we can go into more. And I got so much I want to talk to you about, and I don't know how the hell I'm going to get through this. I'm going to have to cut a whole bunch of it out. I've not, look at that. Let's see where am I going to go next? Should I give myself another 10 minutes? 10 minutes. Somebody wants to ask questions. I got something here on the future of the Swiss financial sector, but I was going to do that at the end. So let me just think about because like if I dive into one of these subjects, it could be like 20 minutes more. So what am I supposed to do with that? I'm going to just, so, you know, it's not been an, we have the most incredible team on the planet. They're really awesome. And for the first time in my 20 years of running this small investment business, we have people who actually want to invest with us. They always did want to invest with us, but we have actually somebody on the other end of the phone to call them up and to engage with them and help them send the money to us, which is really wonderful. And if, you know, I'd want to, it would not be appropriate, but I really ought to give Chantal, who's organized the team, a round of applause, and David, who supports her. And yeah, thank you. Yeah, you just keep applauding my team. But it's been really frustrating because we've received, since the beginning of the year, quite a lot of redemption requests, more than usual, I think. And I think that people are really unhappy and skittish about where the world is going. And they are unhappy, people are unhappy about the huge overhangs of debt that have arisen because of COVID. And governments did absolutely the right thing by unleashing vast amounts of cash into the economy. And they took on an enormous amount of debt. And so people are looking at the debt overhang. And then we got, you know, Russia decides to invade Ukraine, and who knows, they might invade Poland next, you know, and just imagine what happens then. And so people get really skittish, and they want to pull their money out. And the point that I want to make to them, but I can't, so I'll have to make it to you. I can't make it to them because when somebody wants to take their money out, you don't ask questions, you send them their money, it's their money, you know. So it would be really, really bad form for me to then get on the phone to them and say, look, I really think you shouldn't do this. And they're like, what are you talking about? I want to do it, leave me alone. So, but I actually think that given the extraordinary difficulties that it looks like we're about to go through, the very, very best place to be is businesses. You know, I would say equities, but if you have, there's at least one person here with a family business. But in businesses, and I feel I can explain why, and perhaps also real estate. But here are the places you absolutely don't want to be. You don't want to be in cash. You don't want to be in crypto. Sorry, all you crypto fans. And you don't want to be in commodities, gold and silver. And I hope that I can explain why. And I'm going to do that for 5 or 6 minutes. And then I am going to talk about the evolution of the Swiss financial sector. So the problem with cash is that, as we saw, inflation in the United States last year was 7.5%. It's depreciating by 7.5% per year currently. The cash you hold in your bank account. And so I guess I'm talking for an American perspective. We live in Switzerland, at least I live in Switzerland. But the world I'm investing in is a global world, and my investors and I would not feel comfortable purely investing in Switzerland. And I guess we could go into why not, because you could actually do that. So in Switzerland, cash is not depreciating by 7.5% per year, but the US dollar, which is still not Bitcoin, the currency by which we price just about everything, is depreciating by that amount. So unless you know, if you're an investor and you have like an expenditure that you think will come up within the next year or two, you know, if the expenditure comes up at the end of at the end of 24 months, you will have already lost 15% of your purchasing power. So I don't see much point in holding cash. The problem with crypto, for me, is even if you trust it in all sorts of other ways, it is not a very reliable store of value at all. I'm not sure that I'd want to have 100% of my reserves sitting in something that is bouncing around like that. I think I almost would prefer cash depreciating at 7.5% per year, because at least I know the rate at which it's depreciating. It's predictable for me. I can plan around that, whereas crypto, I would not be able to plan around. In fact, if you put a gun to my head and said crypto, I'd rather just be in gold and silver. But the thing about gold and silver and crypto, for me, is that they're not productive assets. And I think that, and forgive me, because I'm going back to kind of something that I've said a lot, the reason why wealth is created is because businesses deliver things that people want on a consistent basis. And you don't want to be like the giants in the Rheingold who just take their gold and they look at it and fight over it. You want to deliver value to society. And when you deliver value to society in a consistent way, then society will reward you. And so I think that those are the places where one wants to invest. I can go into real estate a little bit. So real estate does not deliver as much value to society as all of the companies that are out there are, but it's an extraordinarily durable asset, and you can own it 100%, and it will survive wars and meteorites, hopefully, and all sorts of calamities, and that's what we're looking for. So I think that real estate is fine, but it's really businesses that create things that people want, and when they create things that people want, they grow. And that's the place where, if you look at the Forbes 500 list, if you look at the richest people, Bilanz in Switzerland, all the people there, or the vast majority of people there, are people who were long-term owners of businesses that delivered something that people want into society. So that maybe took less than the time that I thought it would take. I guess, just briefly rewinding, do I talk about inflation? Or do I move on to the financial center of Switzerland? I haven't moved my slides on, so we'll see where we were here. I think I did, I think I did that. Oh, this is a big topic. I should get into this. Should I? The time went. We've got 15 minutes. We've got to stop at 7.
We can add a little bit of time. We really need to leave at latest 7.
7 what? Chantal, I will take my guidance from the officers of the investment club. Where are the officers? Yes, tell me. I will, where am I here? So, I don't know, this may be obvious to you. I'll just stay with inflation for a second. So a big revelation to me, and I am going to give a nod to your professors. So I read some guys called Reinhard and Rogoff, who are at the National Bureau of Economic Research. They, in the United States, they are a husband and wife team, and they made it their business to study debt and debt defaults around the world, and they're enormous experts in it. And I discovered a term that is really, really valuable to me. It's called financial repression. And so when we think about the debt overhang, there are many ways that we might get out of the debt overhangs that exist in the developed world, in the West, without having inflation. For inflation, I believe, in spite of the 7.5% in the United States last year that the FT reported, it might still be a temporary phenomenon. It might be all related to supply chain. It might not be runaway inflation like we had in the 70s or like you might have in a hyperinflationary country. And so you might ask, how do we get rid of the debt overhang? And there are multiple ways we could do it without inflation and without defaulting. And one of them might be to just grow. If we manage to maintain interest rates of 1 or 2%, and for some reason we manage growth rates of something above that, then the amount of debt, you would have something called R minus G minus R. Any of you mathematicians in the room? Yeah, maybe? No? Got a blank stares, but we can look at it afterwards if you like. If the economy is growing faster than the rate of interest on the debt's going to become a smaller and smaller proportion of it. The country could privatize assets if there are assets to privatize. And the United States, if it wanted to, could privatize a lot more. I mean, the United States federal government owns enormous amounts of land, and that land is becoming more valuable as more and more people live on it. The United Kingdom, there's something called the Crown Estate that owns all of the shoreline of the United Kingdom and all of the mineral rights that exist around on that shoreline, and all of the fishing rights for that matter. That is, I don't know what it's worth, but it's an enormous amount. And so there is privatization, but Financial repression is simply the various mechanisms by which the Federal Reserve or the central bank forces banks to accept, and savers effectively to accept, less than the rate of interest than they ought to accept if it was a market rate. And the example that I have from studying at around your age, Japanese political economy, is the Japanese postal saving system, where vast numbers of Japanese housewives, I believe to this day, will only deposit their money in a post office bank and they get next to zero interest rate. And that is, they're not getting what they should get on their money, but that enables the government to borrow at below market rates. And I think that one of my investments, actually, somebody's going to do an internship of Bank of America. Go get him, because we have an investment in Bank of America. And something that you might enjoy going and doing if you're interested in this kind of thing is to go to the Federal Reserve website and just look at how many regulations the banks have to comply with, which are being promulgated the whole time in the most minute way. And we were recently regulated, well, 5 years ago, regulated by FINMA. I promise you, it's got, you cannot compare. And what people don't realize is that these guys are kind of like franchisees of the central bank. The central bank has got the good stuff. It can give them free money if it decides to, and so you cannot get into trouble with the central bank, and they comply with the rules. And if that includes being forced to get a lower interest rate on your debt than you ought to, then you will do that as well. So I think that there's a misunderstanding in my investor base on the impact of inflation and higher interest rates on a portfolio. Look up any hyperinflationary country and look at the stock market, and you see the chart for the value of the stock market goes straight up. And so this idea that just because you've got inflation, stock values are going to come down is not necessarily true. I think that it's very likely that the absolute nominal level of prices will go up. So we could have inflation, and we could have higher interest rates, and the stock market could be higher as well, because it's reflecting the higher asset prices. It doesn't mean that your purchasing power is any greater. What's my point? My point is that even inflationary times, productive businesses are the place you want to be. There's my talk on inflation. So I'm going to try and bring this in by 7. This might be the most interesting for at least some of you here. I don't know. But this is a whole topic, and I see, like, are we doing okay here? Is this interesting? Are you falling asleep, or am I helping you in any way? Do you think, will I get good grades for the talk? I don't have any notes here for this, but I can look at the chart. Maybe I do. Let's see. I should have notes somewhere. Then I don't have to look up at the. Did I make notes on that? I did, but they're not here. That's okay. I'll look up at this. Oh, there we go. Check that out. So I know that there are some people here who are Buffett aficionados. Some people aren't. And I'm sorry if you're not. You're going to just have to catch up. But Ben Graham came out of the Great Depression. After the Great Depression in the United States, nobody wanted to buy equities. People were completely demoralized. And as a result, there were large numbers of companies out there that had the market capitalization of the company was sometimes less than the cash on the balance sheet with no liabilities. Sometimes it was less than the liquidating value of the company. It's like, I dream of being able to do that kind of analysis because it's so easy. You have, what people used to talk about was holding a Geiger counter over the balance sheet. Warren Buffett comes along and he's like, these things are not so interesting. I'm going to focus on earnings power. And actually, I'm even going to pay up for earnings power because I can find these companies like Gillette or Coca-Cola that I know it looks like I'm paying a high price today, but actually, if you look at where these earnings will be in a decade, it's going to be awesome. They're going to have gone up 10 times, and you'll see that the price, and that's true for Coca-Cola. Berkshire Hathaway gets paid more in dividends on their Coca-Cola shares than they paid for the shares originally, which is kind of like an astounding number. Then in my little potted history here, we have this guy, John Malone. And I've never invested with John Malone, but anybody who's interested in investing should go read a book called Cable Cowboys, is one of them, and the Something Shell game, which kind of shares the extraordinary way in which he built up this empire that was TCI Communications. He built up the cable industry in the United States. And he didn't focus on earnings, he focused on the ability of these companies to produce cash. And the fact of the matter is he bankrupted quite a few of these companies along the way, but he found ways to take control of them outside of the bank, on the other side of the bankruptcy court. Very, very smart guy, but in a certain way, he was applying the same kind of metrics and techniques that Warren Buffett was, but he was looking at the company in a more nuanced way. I just want to bring you up to the present day, where in my portfolio, I do own some Twitter, and I do own some Google. But I am surrounded by friends, so you guys will be interested in this because I'm going to name some companies that you maybe have some familiarity with. I have a friend who owns a chunk of Spotify, and we all have Spotify on our phones. And I have a friend who took me through his analysis of Salesforce. We use Salesforce in my office, and it's a phenomenal product. And then, of course, we have the famous case of Snowflake that was invested in by some guys at Berkshire Hathaway, and that trades at 100 times revenues. And anybody who wants to do, if you assume that 100% of the revenues are paid out as profits to the shareholders, by how much do revenues, and they're obviously not going to do that, they're going to have some expenses, but by how much do revenues have to grow and for how long for you to start looking like you paid a low price for the company? And in order to come to the conclusion that these companies are actually cheap, the analysts, many of them are friends of mine, engage in a kind of analysis that I am really struggling with. And in this letter that I wrote to my investors, there's one part of the letter where I completely disparage these valuation metrics. And then on the other side say, yeah, but I still have to engage with them because there's something real going on there. And so this is where I can part company with your professors, because I don't actually have to, and I don't have to, so you see somebody who's genuinely engaged with this stuff, but is genuinely confused and hasn't figured it out for himself yet. I am very certain that to pay 100 times revenues is not a smart idea, but I have people who I respect very highly who tell me that it's just because I don't understand it, and I ought to be willing to pay that. And the fact of the matter is, if I were just taking products that I use happily in the office, like Salesforce, or privately, like Spotify, and I just invested in those, even though they make no money, I would have done extraordinarily well in spite of the declines that have happened recently. And I have an understanding of what's going on. And I think that my job in trying to grapple with those kinds of businesses and get margin of safety is extraordinarily difficult, and I haven't figured out. So what I've done is I kind of just stayed away. But so I guess it was only 2 or 3 years ago where I understood this idea that, and it's just a powerful idea that I'll share with you, and then I'll leave the others out because I only got 5 minutes to go. It's sort of like network dominance. So you have these companies that go after market share because once they dominate the network, it's an extraordinarily high barrier to entry, and then they can make large amounts of money. And if you think about WhatsApp, the network effect of WhatsApp is absolutely insane. And well, I'm curious. We can start with me asking you a question. So, well, we don't have numbers, and I don't have the numbers in my head, but Warren Buffett asked the question of the Wall Street Journal. He said, if you gave Warren Buffett $1 billion, I think was the number, he would not be able to displace the Wall Street Journal as the leading business newspaper of the United States. And so, we have Telegram and Signal, and how much money would you need in order to displace WhatsApp from people's phones. I don't know. It could be infinite, could be impossible. And to that point, quick story that I heard on a podcast. Jeff Bezos approaches James Courier. Jeff Bezos apparently was on the board of eBay, and James Courier, who's a venture capitalist, was invested in eBay. And Jeff Bezos says, we're going to compete with eBay in auctions, and maybe you want to step off the board because it's not going to be pretty. And 5 years later, with Amazon, with all its resources, throwing everything they could at the idea of auctions, and in spite of eBay being a really, really clunky business, and a clunky website, and not the great software programmers, and all of those things, Amazon could not dent their business. And so you get this, and that's true probably for cloud computing like Amazon Cloud and the other cloud companies, where the lock-in effect is absolutely insanely enormous. And then my problem is that we all want to invest in the next Amazon, eBay, WhatsApp, but there are all these companies masquerading as the future Amazon, eBay, WhatsApp, like WeWork, like probably Uber, like probably a bunch of other companies. And I decided 6 months ago that I needed to really study very carefully the venture capital firms and what they're doing. Me, a value investor, a guy who worships at the church of Warren Buffett, because I could see what extraordinary things are coming out of there. And it's really hard because the sales machine that is Wall Street has been well written about, but there's an extraordinary sales machine coming out of Silicon Valley, which is kind of pumping up these companies, giving people reasons to buy their shares to keep the valuations high, because there's a whole kind of food chain that has to take place. And I, as a public investor, stand at the end of it. What's my point to you? It's really hard, really, really hard, and I don't know what the answers are. And maybe one of you will give them to me, and maybe sooner or later I'll discover the answers. What I would tell you, so last point on that is, and then I'm going to go talk about Switzerland very briefly, is that I think that a lot of business narrative and stories about success in business are written in a way that the writer has to entertain you. And so they're going to come up with like the 3 big things that the person did, and like as if that's what's going to get you to nirvana and success. And the reality is that it's not 3 big things. It's just trying to push yourself a little bit further on a daily basis, trying to get a little bit further, and sort of like strengthening those muscles. And if you keep trying to do it over a period of 1, 5, 10, 15, 20 years, eventually you discover that you've gotten somewhere. So what do? I grapple with the stuff that I've just shared with you. In a certain way, I'm grappling with it here. And if I just keep trying, eventually I'm going to find that I'm in a different place when compared to the person who didn't keep trying. So there's my little talk on valuation. And then last point for a minute or two, the future of the Swiss financial sector, which I guess I do care about because I'm a part of the Swiss financial sector. I'm very proud to be regulated by FINMA. I think that since the loss of banking secrecy, which was kind of an inevitable, there was no way that Switzerland was going to get around it just because of the changes in IT. And I think it was the right thing to happen. I think that I see enormous stress and difficulties in the Swiss financial sector, and I think that it's having a really, really hard time adjusting to a world without banking secrecy. I don't think it should be that hard, actually. I think there are a number of reasons for that. I don't think that the 2 dominant banks help. I think that they're too large. I think that they are unable to reform themselves, and somehow in a small country with these large banks, it becomes very, very difficult because there are personal ties. And so decisions to completely rip out the top layer of management, for example, and replace it, which is kind of not 100%, but look, it kind of happened at Wells Fargo. Wells Fargo lost its way in the United States. And there were some major changes when they were kind of pummeled by the regulator for a long while. And they were kind of beaten up in a way that it doesn't appear to me that banks here have. But so my vision for the future of the Swiss banking sector is something that is not dissimilar if anybody here has visited Boston. Boston's not the major city of the United States. New York is the #1 city, and maybe the second city would be, candidates would be Chicago. Oh, there we go. Last time I felt welcome. This time it's telling me, okay, time to stop. So we're going to get there. So Boston or San Francisco, it's an old city. It's not the largest city. It's not where the most dynamic place, but an enormous proportion of the people in the United States and around the world trust people and financial firms in Boston to manage their wealth in one way or another. And it's a home to a very large number of amazing financial institutions like State Street, mutual funds like Putnam, Fidelity, the list, a number of private equity firms that I can't even think to mention. A very, very successful venture capital industry. It's full of great universities and highly intelligent people and good quality of life. And does not that sound like Switzerland? Does not that sound like Zurich? And I think that the reason why I'm here is not for banking secrecy. I'm here because there's very, very high quality of life, and there's extraordinary certainty in the way people operate, and a precision and a dedication to getting things right that makes it zuverlässig. You can rely on it in a way that you can't rely on anywhere else. I couldn't imagine. I'm over in London a lot now because our children are at school there. I could not imagine entrusting a group of people in London to do the things that a group of people here do. And I just wish that Switzerland saw its way, the industry as a whole, I'm not naming any individual, saw its way to that kind of future, which for me is very obviously the future that Switzerland ought to have. One last point, and I'm going to do my very best not to name a very important financial institution here that did business with Greensill that I'm very angry with, because I think that, I want to get in front of the top 200 or 300 execs and say, look, people, the time of dealing with sleazy people just to make a buck is finished. It's over. If that means that we have to cut our profits by 50%, that's what we do. If it means that half of you need to be laid off and go become farmers, when you do that, you tarnish the name of your firm terribly. You tarnish the reputation of Switzerland. It's to Switzerland's great credit, in my opinion, that it went along with the sanctions against Russia and instantly did the same thing that the other European countries did. And what I'd say to the fellow Swiss people in the room is that we are rich enough as a country to decide who we do business with. And we should only do business with the very best people. And we should leave the dregs to other countries. We shouldn't go for the last dollar. Very last point, and this is from Charlie Munger, because he makes me feel safe if I quote him, of course, is that I realized I've been to the last 22 annual general meetings or so of Berkshire Hathaway, and it was only after 10 years of going that I realized that the standard by which Buffett and Munger make decisions that is way above the legal standard. There are plenty of things that are perfectly legal that they would not do. And I would put to all of you who perhaps some of you will go into the Swiss financial services industry, I'd like to put it to the executives of some of these banks. The standards need to be way higher than the legal minimum in Europe. Some people talk about Swiss finish. And there are people who should just not be clients of Swiss banks, period. And if you do that, you'll avoid the kind of losses that some people must be having in their private client portfolios. Thank you so much for listening to me. I really didn't expect to go this long. And now we will go to questions. And Ryan is going to say for how long we're going to go for questions before we have to get out of here.
Chantal? 7:30. All right, cool. Yeah, so we'd like to open up to questions now. I guess we'll choose the questions or who's asking them based off how eager you guys are. So put your hands up before you hear. All right.
Thank you for coming, first of all. My question is, what's your opinion on the future on the future of investing in public companies in the era of internet and civil activism, where sometimes very often today, the civil activists, bloggers are demanding from publicly listed companies all sorts of counterproductive and irrational things in the name of ESG or other social justice causes?
It's really interesting, and now the guy who's getting into that is Carl Icahn. So Carl Icahn with McDonald's, I don't even remember what his beef is with McDonald's, but he's got like 50 shares of McDonald's. And as a shareholder, that gives him the right to put something into the annual meeting, and then they have to deal with it. My experience of that, the biggest experience I had of that was at some of the Berkshire Hathaway meetings where you'd get an Indian tribe who felt like their lands were being encroached upon, and they would disrupt the meeting and so prevent, we're all there to worship Warren Buffett. And I take that, I worship Warren Buffett. There's like sort of like statue now. Pretty much, we're there for that, and then these people come and do that. Something that I don't understand very well, and I got books by my bed on it, so I don't understand power. So I'm this kind of like small minority shareholder who kind of tries to analyze the world, and when I have an insight, I'll go and buy shares, which rarely have given me any kind of real influence over the company. And these people, in one way or another, they understand power, and they understand how to project that power with a small number of resources to get some ideological thing that they want to achieve. So you kind of asked, I actually don't know what to do about that, because there are rules, and if you came to maybe do some corporate law classes, there are rules about how these meetings are run. There are rules about what gives you the right to put down something as an agenda item. There are rules about what can get you to force a vote or not. And the right people, armed with the right knowledge and a very small number of shares, can try and force their agenda on the company. I think that the bottom line that I would give you is that in India, they often talk about the promoter group. So even if there are publicly traded shares, there will be a group of promoters that are effectively the people who control the destiny of the company, or the guys who make the really important decisions. And I think that when you can see a responsible promoter group that can dodge and duck away from those kinds of things, that can add to the margin of safety in the investment. And where there aren't the kind of like a controlling shareholder group that can do that, then the company could be in serious trouble and could be kind of like, end up not doing very well. I hope that helps. It's just the way I think about it. And I think my answer is, either you've got a management like Berkshire Hathaway where Warren Buffett controls 30% of the company and they can kind of duck it, and the worst is that there's a little bit of disruption at some of the meetings. Or, a company that I looked at a year or two ago is Vitamin Shop in the United States, or GME. It's one of these stores in the United States where you go and you buy vitamins and whey products and all of those things. So the guys who'd kind of rampage and pillage the company were the creditors. So there was nobody there to represent the shareholders, and the creditors just kept putting, it was pretty profitable business, but the business kept on getting leverage because that's what the banks wanted to do. So there are other ways in which people kind of act irresponsibly with assets, and they were kind of running the company in such a way that sooner or later you knew they were going to default on their debts, and then it would go into liquidation and go into the corporate graveyard. So, but you might be better at that than me. So, and there are people who do that, who will end up perhaps getting control of businesses where I wouldn't understand how to do it, because it's just not something I can do. At least not now. Thank you.
Let's go right here.
Thank you. I'm Melinda Miklos. I'm not a student here. I'm here because of your book. So I'm not even coming from financial background. And I would like to actually build a little bit on what you brought up and touch geopolitics and sustainability, maybe. So I have seen articles and stories about, for instance, Edelman's Global Trust Barometer, which is an annually run survey, global survey, says that 75% of the people expect the businesses to take the leadership in a society if there is a leadership vacuum. In fact, during the coronavirus pandemic, they saw that comparing 4 different institutions in societies, governments, NGOs, media, and businesses, people trusted more in businesses than any other any other segments. Now, I think that when you talked about ESGs and all those goals and how you say that it is often just marketing bullshit, sometimes it is, but I wonder that if we zoom out a little bit, I saw that BlackRock, but also the Business Roundtable, the alliance of CEOs of multinational companies, talk a lot about how capitalism should change, or whether we are there already or not. And I think that those talks are more about leadership and management, and sometimes close about environment, diversity, inclusivity, etc. I wonder, what do you think about the change of capitalism? Is it changing? Will it change? How do you reflect on this expectation of people about businesses taking a new role in society?
So thank you for the question. Having taken and thank you for reading my book, and I'll thank anybody who reads my book. So now I'm going to walk back a little bit from the my kind of slightly strident comments earlier on. But first of all, I want to ask you, because I'm just curious, no other reason, where you're from.
I'm from Hungary.
Hungary, okay, so another frontier country. You share a border with Ukraine, don't you? Yeah. So, yes, that's true. Which is probably, sorry, I should not talk politics. We'll get onto your issue. Which is probably supported surreptitiously by the one-stop shop for dictators, which is Moscow. And by the way, having spent a lot of time in the UK, I believe, I don't know if I'm going to get into trouble with anybody here, but I don't care, that the UK is utterly corrupted by Russian money. It is appalling. And I hope that the current kind of reset is going to make a difference. But so I pulled out, so the debate, the way I would sort of describe it is, you've got on the one side, you've got Milton Friedman, who says the job of business is to make profits. That's it. End of story. And then you've got, one of many voices, but I'll take Klaus Schwab. I have an enormous amount of respect for him, who says, no, business has to take care of all the stakeholders, which is effectively what you're setting up. And I just want to give sort of like two things that are in my mind around that. One is, for one reason or another, maybe because of Russian interference, maybe just because of the internet and social media, we have an enormous amount of polarization. So at least in the countries that I look at, there isn't the ability in the political system to solve problems. And so then your question is, people look to business, what kind of problems ought business to be solving? I have managed to get a rate of return on the investments in Aquamarine Fund that's just a little bit over 10%. It's about a 1% margin net of all fees to the S&P, which is what I usually compare myself to. That is not as much as I would have liked when I started 23 years ago. And now, I'm not saying you, but somebody wants me to, so I'm making the same point again. I would find that extraordinarily difficult to do. I think that if I look at, so one of the guys that I don't own shares in his business, but I really admire the leadership of Reed Hastings. I think he's really an extraordinary figure. He's got a book called The No Rules Something. Can somebody help me? Okay, I'll be honest, I haven't read it cover to cover, but I have looked at it, and it has been on my bedside table, Laurie. And he does extraordinary things for the employees of his company. He's done extraordinary things for all of us who like to watch all the amazing shows that are on Netflix. But what should he do now? He should take some of the shareholders' profits and save the rainforest? So I think that leaders like that probably kind of, because they know that it motivates the employees and the customer base, have to make very, very smart choices where they try to move the needle, but they've got to move the needle in such a way that they don't get fired by their shareholders. They don't diminish returns by all that much. And some of the problems that we're talking about that we want to solve are really expensive to solve, really, really expensive. So And then just to go back to the ESG guys, forgive me, are just pen pushers. They come up with a list of stuff. They come up with a bunch of boxes to say, oh, anybody here, you're all too smart to go and work at an ESG rating agency. Please don't do it. You will die 1,000 deaths. You know, you're going to be following some formula. And you know, another service which is there's a shareholder voting service that recommends to people how to vote called ISS in the United States, and they also have asinine things that they do. You don't want to work in a place that's asinine, where you look at what you're doing and you don't respect it. And I really don't think that, so I think that at the end of the day, I feel better, let's put it this way, I feel better in our little business when, you know, at the end of last year, saying to our small team that they each had a budget to spend on whatever charity they chose. And that's a really, really small way. And on some level, that's trying to edge myself into a more moral way of thinking. It's trying to edge me into a way of thinking of stakeholders. But these are tiny, tiny things. And we've only got one Elon Musk. So Elon Musk, you know, he can build 4 companies. Each one is revolutionizing its particular area. And they can have high valuations. And they're like, he's a gift to humanity. He's certainly a gift to all of his shareholders. He's done extraordinary things, but that's not most people. Most people are a little more mediocre, or a lot more mediocre, and I think it's kind of too much to expect that of us. So I've just given you a bunch of woolly thinking myself. I'm not sure if I've answered the question very well. I think that, so let's put it this way. I'm going to put myself as a representative of business. The representative business answer to you is, we can try and move the needle just a little bit, and we do it because we want long-term. The best way to ensure the long-term profitability of our business and to ensure the survivability is to take care of the stakeholders. But that's not going to solve society's problems. And what I'd come back to is say, no, damn it, government, you got to solve society's problems. Don't put that all on us. And in a certain way, you're not representative of government, but it's like, you know, if the government is not solving our problems, then maybe we should certainly change the government, but maybe we should change our system of government. Business is not going to solve the big issues. We only have one Elon Musk. The governments have got to do it, and they've got to think with clarity. And because Ukraine is never far from my mind, we got to think intelligently, and we got to be smart. Actually, you know, the thing is, in Switzerland, we already do that. It really is an extraordinary place. But if you think of how on earth could we in Europe be talking about a green revolution when the result of that green revolution is that Germany doesn't have any nuclear power and relies on Russia for a huge amount of it. You know, we've all read this all over the place, and the damn money that's going to the Russians is buying and providing for the military that is killing Ukrainians. I mean, what kind of idiotic thinking is that? And how did we get so bad and so wrong? And why was it that we were all busy being so politically correct about being green that we didn't take care of our energy security? I mean, it's a terrible, terrible thing. And that is stuff. So not only is it government's responsibility, we've got to be smart about it. And it's really scary because in the UK, there are plenty of people who are attempting to be smart about it, but then you've got demagogues like Boris Johnson, who's got the whole population, or a vast proportion of the population, hypnotized. You know, sorry. Do you know how many refugees the United Kingdom has taken from Ukraine? 50. That's it. And you've got the population in the United Kingdom, like the Russians think that they were attacked by the Ukraine. The population in the United Kingdom think that they're doing wonderful things for the refugees. It's scary. It's really, really scary. And that's a problem that only government can solve, I think. Sorry, I'm feeling quite polemical. But thank you for the question. Köszönöm. Yeah. The only word I know in Hungarian.
You've mentioned quite a few times books on your bedside table. So I know this is a quick question, and I'm sure you'll be answered. What is something that you've read recently that you really think you would like to share, or that has really opened your mind? And
you know, I've got my wife here to keep me honest. So you want to talk about something that I can claim to have read, or that I actually read? That I read cover to cover?
Either way, it doesn't have to be a book, an essay, an article, something that's changed your mind about something.
So I picked up at the airport just recently. Every time I blink, I'm on a plane either from here to London or London to here. But there's a book that you can pick up, and that we've got a bunch of copies coming to the office. You email me. I never understood the history of Germany, and this guy took me through a kind of a potted history of Germany. For example, I didn't realize that the origins of Prussia is in an order of Teutonic knights that started in Akko in Israel and had various different locations until eventually they made their way up to Königsberg, and then they conquered the surrounding area, which was Preußen, and then took on the name of Prussia. And so I didn't understand what was the Holy Roman Empire, and I also didn't understand, it explained to me why in World War II, in spite of having opened up a whole front west of him, under the influence of former Prussians who always saw the enemy as Russia, he opened up a second front with Russia. So I really enjoyed that book. Before that, I'm trying to read more fiction, and the next one on my list is Le Rouge et le Noir, and I just finished, it took me the longest time, David Copperfield by Charles Dickens. I'm trying to read Bildungsromane. And then last year I read The Magic Mountain. So I'm working my way through these big, loose, baggy monsters, I think. But I've kind of gone off this sort of like Malcolm Gladwell sort of, here's a neat idea in a book type of deal. I don't know, I just haven't cracked any of those open. But just for your interest, I'm being prevented. I'm not being prevented. But I really love buying books. It's a real addiction for me. And I have a fight with Chantal now because she wants them all organized according to size and color. And I keep wanting to buy more bookshelves. And I just like having them around, and it's kind of a little insane. And then, so I picked up 72 Virgins by Boris Johnson. I just wanted to get inside his mind a little bit, and I was reading that. And I've just picked up the Thucydides, The History of the Peloponnesian War. And I have to say, it's kind of shocking because the very beginning of that book takes you through the negotiations between Corinth, Corcia, Athens, and Sparta. And you could replace the names of some of the, Russia, United States, Ukraine, and Belarus into, and you could transpose this pretty well. So I'm kind of curious to see where that goes. But so there's some books. But what I would tell you is that, so first of all, I don't know if anybody's got this. Please lose the guilt about finishing the book. It really doesn't matter if you finish. Just pick it up. If it grabs you, keep reading. If it doesn't grab you, lose the guilt about buying the book. So I'll leave you with this thought before we move on to the next question. You don't want a library full of books you've read. You want the anti-library. You want all the books you haven't read. Or what are you going to do with the book you've read? What's the point? You keep it there as some kind of like, you can always go and get another one on Amazon. You want hundreds of books that you haven't read, and you want to have the ones that are most likely to read at eye level. And quick story, I had this amazing lunch with Monish Pabrai. He taught me so much about how to be successful in business, which is applicable in so many different places. And my wife and I kind of like trying to share some of this knowledge with my sister-in-law. And so Monish at this lunch brings up two books, Autobiography of Mahatma Gandhi and Power versus Force by David Hawkins. And those books sit on my shelves for like 2 or 3 years. I just buy them, I put them on my shelves, and then by some kind of serendipity, and so I'm going to have a go at my assistant here for a second. You see, the problem, Chantal, with putting the books in such a way that I can't take them out is that it kind of destroys serendipity. I want to kind of, anyway, okay, I'll leave that alone. But I would actually tell you that, so the guy who helped me with my book is a guy called William Green. He's a very gifted writer. He just wrote a book called Richer, Wiser, Happier. So anyway, I have a long and eventful friendship with him, and he edits my work, and he edits my letter, and he accuses me of plagiarizing about 3 different people, and I didn't realize I'd been plagiarizing them. But Richer, Wiser, Happier I read a couple of years ago, which is a great book. I hope that's helpful. I don't know how we do it. So those of you who didn't get to ask a question, just find me on Twitter, Spier. Ask the question publicly, I'll respond publicly. So feel free to do that. And you can send me a direct text if you like. So
You talked a lot about the high standards of Buffett and Charlie Munger. What's your take on the investment of Charlie Munger in Alibaba?
Charlie Munger bought shares of Costco, God knows how long ago. And there's a really wonderful piece by a guy called Nick Sleep, who describes the rationale for buying Costco. And Costco is kind of like an American Aldi, and is really, really worth reading. So Charlie Munger's got extraordinary insights. And I've learned, by the way, that, and this is the reason why, so I had a go at my sister, now I get to have a go at my wife. So one of the reasons why I want to play more bridge is that bridge is extraordinary training for making inferences. So I've learned that analysis is not just what appears on the balance sheet and income statement, although you should certainly be able to do that and look at it well. But, you know, and this may be the most valuable thing I tell everybody here. You know, based on what I know about this person, based on what all of the history I know about them, based on what I know about their financial circumstances, they just made XYZ move. In Charlie Munger's case, bought a ton of Alibaba. What does that tell me about the world? How does that update my evaluation of the probabilities that something will be true or false? So I had to get to the realization that I'm never going to know everything firsthand. I have to make those inferences. I have to study people like Charlie Munger, but also study people like Carl Icahn. And then when I see them make a move, try and understand why. Most of the time I won't, but every now and then it will update my probabilities in such a way that I have an insight which will enable me to do something. So back to Charlie Munger. So that's some information on Costco. Charlie Munger also had an investment in a company called POSCO, and it was a kind of like the rationale was not dissimilar to Costco, this kind of low-cost operator, as Nick Sleep would say, scale economies shared. It did not work out. And POSCO, which is the leading steel producer in Korea, is an interesting business, but it has not delivered the kinds of shareholder returns that those of us who went into it were expecting. So now we go to Alibaba. And I think that the company, as best I can understand, has reached a degree of centrality in the Chinese economy and in the global economy that as China grows, in spite of everything, all the other noise that is going on, it is extremely likely to be lifted. And in spite of not having Jack Ma at the helm anymore. And it seems to me that that's the kind of analysis that Charlie Munger has done. So it's in this unusual place of being part of the retail infrastructure of China and of the world, while at the same time having some really, really good economics going on around it. So one of the big inferences that I made, so here's a, I happen to be aware that some people were selling Alibaba and buying other companies, and Charlie Munger was encouraging them and agreeing with them that that was a smart move. And then I discovered 3 or 4 months ago, whenever it was, that he's been buying Alibaba while he's been encouraging other people to buy something else, which was really, really interesting to me. So the other sort of like blockbuster company in China, Tencent, going back to my earlier point about kind of analyzing stakeholders and doing real sustainability analysis, I have a huge problem with gaming companies because I think that many of those games are rotting the minds of our young people. It's interesting to me that the Chinese Communist Party decided to ban children from playing more than 1 hour a week. And so for me, gaming companies may be the new tobacco. And I think that that's part of the reason why he was not interested in Tencent. Last piece of the analysis, I happen to know, and this is a kind of inference, you know, he's got a huge investment with Li Lu. Li Lu has got extraordinarily good understanding of China. Li Lu is this Chinese and very, very genius investor who was at the Tiananmen Square demonstrations. He was one of the protesters. For a certain period of time, he was a persona non grata in China. And so that leads me to believe that Charlie Munger has a deep understanding of the place of Alibaba, not just in Chinese business, but the way the Communist Party sees Alibaba. I also bought some Alibaba. What I did was I sized the position right for, I sized it well below what would have been right for me. I think often the answer when you're investing in public markets is position sizing. You're very lucky you can go, especially if you run a small fund, in many, many of the businesses that are out there, you can go as large or as small as you like. The last thing that almost keeps me up at night is the fact that China is a huge human rights abuser. There's no question about that. And I struggle with that. At the same time, I try to, what I tell myself is that so long as I think that the good that the Chinese Communist Party has done by lifting so many people out of poverty, it's something that has never happened in history before, gives them some leeway. And we have to hope and pray that at some point they become more respectful of the minorities that live in their borders, the Uyghurs, Tibetans, and others. That's my thinking about Charlie Munger and Alibaba. And I'm not even sure if I answered your question. Did I answer your question? Did I address it? Everything all right. Good. Well, thank you. Thank you, everyone, for coming.